Pratik, we're talking about sticking to quality as well. There is also another side, and enough people try to figure out when is it that a cycle could turn around for sectors and themes. I'm coming back to this whole 3 years of Modi Sarkar and what it means for the markets. Now, when the Modi government came into power, the pet themes that everybody spoke about, at least on the social media, everybody spoke about was look at railways, look at power, look at what will happen to the river projects and all of that, and try and bet on those. And if we see, those companies really haven't done dramatically well, save for an odd KNR construction, etc. But we haven't had infrastructure or power or other companies come up and really put their hand up in performance. Can that change?
So a lot has been said, expectations have been built, but where are the monies? How much money has been spent? So if you look at the budgetary allocations, this year capex is increasing by 10%. Now that's less than the nominal growth rate assumed in the economy itself, at close to 12%. Okay, so if you are a growth investor, you know the amount of money that this space will make would be less than the nominal growth rate of the economy itself. So unless you buy something which is terribly cheap, by compounding of earnings, you are not going to make money in this space.
Right.
And this space tends to be very, very volatile because it is order book driven. You get an order 1 year, you will not get it next year. Somebody else may do it. But if you are a well diversified large company, let's say like a Larsen, yet you expect to make that kind of a growth in revenues this year. Maybe a higher growth in order book, which is a different cup of tea.
Sure.
Now look at the environment around. For that kind of a company, is Middle East really happening? So in terms of growth, that would probably not happen. Is the private sector or the government manufacturing sector really happening? So overall, government is the single biggest driver of capex, and that it is doing at a 10% clip. So the businesses which are focused on capex will grow at sub 10% in a secular linear manner.
Right.
Does that excite equity guys? Probably no. So that is one reason. Second, many of the businesses which are government run or have this focus on 12% ROE. It's a fixed ROE business.
Yes.
So a power grid does capex, but fixed ROEs, or most of the businesses fixed ROEs. So yes, in a period when interest rates go down, these businesses do very well, and they have, but they are not something that you will buy now and you hope to again realize those kind of returns.
Right.
Simply because interest rates are now stable and the new levels are factored in the stock price.
Got it.
So that is the other big issue.
Okay. There's one question, Pratik, that I have to ask you though, is on real estate. Your group is well entrenched in that space as well. And I'm just saying, if I just look at the pocket right now, in terms of reforms, clearly the last 6 months, there's been a bunch of things that have been done for real estate as a space. Probably some of these would help the real estate developers as well. RERA may be an exception. I think enough bodies are saying that it needs to be relaxed, so on and so forth. But I'm just trying to figure out, it's a space that has not done anything for the last 10, 12 years from an equity market perspective. There's not enough presence as well. But you probably make the most money when the fear is at its peak. And despite all these reforms, people are not coming out and buying. Is it fear which is rightfully placed, or would you believe there are opportunities here? Landowners or companies with track record, whatever.
So, this is an example that I keep giving. What did real estate companies do wrong?
The answer is everything.
So, when they were acquiring land, they went and told people we are acquiring land. Land is something that is getting scarce and scarce. That was right. It's just that they acquired so much of it that they can't build on it. And if they're building on it, they are unable to sell that, which is resulting in spiraling of interest expense.
Sure.
Okay, so corporate governance part, let us set aside for the time being. I think there are some fundamental changes which are happening into the business. It's not only real estate, it's also happening to let's say every asset owner. So if you can put these assets into a REIT, that's a big reform, and I think before a real estate REIT happening in the country, we have had a REIT from IRB, InvIT. So I think if that can happen, there are people who seek yields. If they can take those assets, the problem that is plaguing a lot of asset-rich companies will get sorted out. and we go to the next level of growth. So that is something to look forward to, and I think government has really put their heads together for this piece. They have tried to solve the problem. Second, the fact that for low cost housing the tax benefits are immense.
Yes.
In many ways the tax benefits to real estate is better than what is there for equities. I mean, if you keep flipping real estate and invest into the next piece, you never pay tax. So it is asset which should stabilize for sure, but I have just this one feeling that prices would need to come down. So any amount of reform, if yesterday somebody was unable to buy it, just because somebody has reformed doesn't mean that the ability to buy it today increases. So either time needs to spend or incomes need to increase. Unless that happens or prices fall, the momentum in sales that will drive growth
need not come back in a hurry.
Will not happen.
Okay, Nilesh, I just looked at the last 3 years, the top losers. I think the index that I chose was the Nifty NSE 500. JP Group stocks, Amtech, Bhushan, Arcom, Unitech, UCO Bank, Aban. Yeah, probably clearly shows that Modi or no Modi, if the business structure or the balance sheet is not safe enough, no amount of magic can help you. I mean, is it just a blanket no? I know you started off saying that the basic tenet of investing is to invest in quality. There are enough and more people who try to take this punt by looking at stocks which have fallen so much and then go out and buying it. With the economy on the mend, buy economy related stocks, etc. But this list clearly shows that at no level, if you had bought these stocks, you would have made money over the last 3 years, not just over the last 1 year.
Oh yeah, absolutely. I think what you'd probably call a euphemism is the cigar butt approach to investing.
Yes.
I mean, that's gone out of fashion decades back. Okay, I mean, Buffett himself realized this maybe 50 years back, saying the cigar butt approach to investing is no good. Okay, which in short means that you can't just take a price call. I mean, naturally, of course, you have to take a price call.
Yes.
But for that, you need to figure out what's the intrinsic value, or what could this be worth potentially down the line. I mean, to just say that, okay, something was 100 rupees, it's come down to 10 rupees and therefore it will go to 20 or 30 or 100 back, I don't think that makes sense.
Sure.
So I think what is very, very important is to really figure out that it could have gone to 100, it is now 10, but what is its worth? Is it worth 2 rupees or 20 rupees? That's very, very important.
You do that for each and every of the investment that you make, right?
That's very important, because otherwise you really not know. It's like otherwise you are like a passenger traveling somewhere and you really don't know what your destination is.
Sure.
Okay. It's pretty much like that. And I think that's very, very important. So no matter what it is, finally, I think from all the names you kind of enlisted, I think what is running common across all of these is basically, avoid over-leveraged companies where balance sheets are a challenge. Avoid companies which really don't have cash flows, or at least if not fixed cash flow, free cash flows, or at least they need to have operating cash flows.
Yes.
So I think that's clearly the moral of the story, that basically, when you kind of really try and invest, what do you try and figure out, that does this company have both the bandwidth and the balance sheet to grow and achieve what it is aspiring to achieve.
Do you foresee that possibility in the exporters? I mean, IT and pharma are now kind of, not really cigar butt, but I mean, if you look at any of the names, large cap pharma, probably 40-50% is the kind of erosion that has happened from the highs. IT has been languishing for a while, quite frankly. They may not be really down in the dumps, but languishing for sure. Is there opportunity there, or you don't foresee that?
No, there could definitely be an opportunity. The good part about both these sectors is that, at least the balance sheets are not over leveraged.
Yes.
So these are companies which will perhaps not go belly up.
No, I'm not trying to draw a simile out here.
No, I'm just saying because I'm saying is that it came out from the context.
Right.
So I don't think these companies have challenges of debt and that they will have to go and, sell off some assets and to kind of remain solvent and all of that. I think the challenge that they are facing is basically business related challenges.
Sure.
Okay, and how they basically adjust themselves to the new business realities in the developed world, I think is going to be the challenge. And finally, any company, whether it is large cap, mid cap, whether it is pharma or whether it is IT, it will have to figure out, it will have to reorient it to itself, it will have to reinvent itself,
Sure.
and get back onto the growth trajectory. Of
Yeah.
course, will these kind of companies now go back to those very high double-digit growth rates? Looks unlikely, at least for the next 2 or 3 years.
So are you enthused at buying any of these, or are you avoiding them right now?
You know,
Fresh
I think,
purchases,
yeah,
I mean.
if I look at both IT and pharma, I'm just saying purely from a
Sure.
from a volatility and a safety point of view, I think right now IT looks more safer than pharma.
Okay.
Okay, and the reason for that is because in pharma, I think the X factors are quite a lot today. Okay, I think in IT the X factor is demand, but I think in pharma it's not so much the demand, but it is about price erosion in the US generics market.
Sure.
It is regulatory action. It is consolidation by the distributors in the US marketplace.
Right.
It is about regulatory action in India, where the government itself is coming out with, you know, various price controls on sale of medical products, medicines, pharmaceuticals, all of that. So I think there are multiple challenges.
Got it.
Okay, and I think that is really where the problem is. Whereas in in IT, what you're seeing also is companies doing buybacks.
Yes.
Okay, which hopefully over a period of time all these are positive, whereas in pharma you've not yet seen that happen.
Sure.
Despite
Okay.
prices falling 50%,
50%,
I
yeah.
don't think any pharma company has done any buyback
Not that I
apart from
remember,
maybe
yeah.
a token buyback which is in lieu of dividend.
Yeah.
But you don't hear about pharma companies returning 5,000 crores, 10,000 crores, 15,000 crores cash back to shareholders.
That's true.
So I think that is where I would say the difference is.
Okay.
So I think my sense is IT would be less volatile.